So, welcome to today's presentation. My name is Peter Youssef, Senior Market Analyst at IronFX. We are going to be mixing technicals with fundamentals somewhat. At this point, I'm going to be reversing the sequence at which we were looking at trading instruments. We tended to have more of a focus on Forex pairs. We're still going to be seeing some Forex pairs today, but I would like to make a start with WTI. Now, WTI's price was on the rise practically since last Thursday. And on the fundamental level, I would note that we had a number of factors which tend to support the price of oil. I would make a start with the market expectations, the dovish market expectations for the Fed to cut rates extensively in the coming months, which more or less may have enhanced market expectations for some increased demand for oil, and that was supportive for oil prices. The main element, though, which stood out and supported oil prices in the past week was the recognition of market worries about the tensions in the Middle East, and especially about the possibility of a war in Israel, given that negotiations for a ceasefire had failed to produce a deal. It's understandable that should the tensions, or if you prefer, the Israeli-Palestinian conflict intensify further, it may overspill into neighboring countries as well, which in turn could jeopardize the oil supply lines of the international market. I would be also noting the recent outage of Libya's oil fields, which was a key issue in the past 2 days, especially yesterday. And should that be maintained, should the outage be maintained, we may see oil prices gaining additional support. For the time being, we note that oil's price seems to be correcting lower. That was partially understandable given the steep rise of WTI's price on Thursday, Friday, Monday. Yet bullish outlook seems to remain. Let's have a look at the 1-hour chart for more detail here. And let's draw an upward trend line, see if that has been broken. And it seems that it has not. Back to the daily chart, 1-hour chart, extended a little bit further. Back to the daily chart, here you go. It's going to be interesting to see whether the price action of WTI will be breaking or interrupting the upward movement of the past 3 days. If that's the case, then practically stabilization of WTI's price would be the most plausible scenario for the time being. By the way, mind you that for the continuance of a bullish outlook, we would require the oil's price action, WTI's price action, to breach the 179.25 and start aiming for the 283.95. At this point, I would like to lower the R1 a little bit and up slow as to reach this peak here, bringing it down to 78.75. That's 50 cents lower. So for a bearish outlook, it seems to be quite distant in the future. There do not seem to be any prospects for such a scenario to materialize right now on a technical basis. Albeit I have to note that the market worries about the demand of oil from China seem to be intensifying, which could weigh on oil prices. I would be also noting the release of the US oil market data today and tomorrow. We're getting today the AP weekly crude oil inventories figure. Should the release more or less show a widening of the increase of US oil inventories, we had an increase last week already of 0.350k practically barrels. Should that figure widen today, we may see it having a bearish effect on oil prices. Yet markets, I think, will be also looking for a confirmation of the widening of or an increasing of US oil inventories during tomorrow's EIA crude oil inventories figure. Should that be reaffirmed, something which did not happen last week, that could actually, I wouldn't say weigh, at least clip the gains of any bullish tendencies. For the time being, we tend to see the case for the price of WTI stabilizing somewhat, but the upward trend line is still there, which could lead it higher. It's going to be interesting to see what happens at the American Open. Mind you, it's also noteworthy that the RSI indicator has risen, but stabilized around 50, implying a relative indecisiveness on behalf of the market for the future path of WTI's price. Let's have a look at gold. Okay, I'm definitely going to be readjusting the levels, widening them. And that should be practically a record high level, 2530. Let's have a look also at the S1, 2470. Setting the S2 at around 2420. And lowering the S3 as low as this draw here, setting it at 2353. Locking everything in. Now the bullish tendencies, or at least the upward trend line which was guiding gold's price, was interrupted. On the other hand, we have to note that there is a bullish tendency in the bigger picture. But overall, something like this. On the one hand, we have lower truths, but the price action of gold seems to have hit a ceiling at the 2530. It was tested once and aimed for another one. That was yesterday, but overall I tend to see some signs of stabilization. The RSI indicator tends to remain between the readings of 50 and 70, implying the presence still of a bullish sentiment, maybe not so strong, but still there, of a bullish sentiment of the market for the precious metal. Should the bulls maintain control, I would expect the precious metals price to breach the 2530 resistance line and start aiming with the next possible target being the 2600. Mind you that a possible rise of gold's price would be, in my opinion, finding itself within uncharted waters, and that may be providing some gold feed for gold bulls. Okay, let's have a look at US 30. That would be Dow Jones. We're going to be making practically a chart from scratch. We have the price action. Definitely this peak here is a resistance line. I'm going to be setting a support line at this level, and that would be at 40,680. And I'm basing that practically on this true here. Next level could be set at this true, 40,040, and the one even lower right here, encapsulating the sideways motion. Note how the S2 and the S3 are practically limiting the movement of the index both to the upside and to the downside in that period. For the time being, 41,665, 60, yep, 6 seems to be like a record high level. And I would be setting the R2 at 42,600 and the R3 at 43,600. Let's add some labels. R2 at 42,600. And the first resistance line at 41,660. S1, 40,680. S2, 40,040. And S1, 39,270. The upward motion, I think, is clear. and it's highlighted by the upward trend line right here. The RSI indicator remains just below the reading of 70, implying the presence of bullish sentiment of the market for the index. The fact that the price action seems to be hesitant to create a higher high. I would be also noting here that it's approaching the R1 41,660, which is practically an all-time high. That tend to create some worries about the continuance of the bullish movement. On the other hand, though, I would be noting here that as long as the upward trend line remains intact, we maintain a bullish outlook for the index. Should the bulls maintain control, I would expect the price action to breach the R1 41,660 and start aiming for the R2 42,600. At this point, it would be interesting to note that besides the bullish outlook, we see the case for some stabilization of the index. And in that case, we may see the price action breaking the prementioned upward trend line, signaling an interruption of the upward movement, but at the same time remaining between the R1 and the S1. For a bearish outlook, the bar is pretty high. The price action of the index would have to breach the pre-mentioned upward trend line, but also breach the S1 40,680. Okay, let's have a look at S&P 500. Now the situation here is less bullish. It's characteristic that the price action has breached already the upward trend line which was guiding it, and that tends to highlight the interruption of the upward movement, given also the stabilization of the index's price action. Once again, we're talking about the S&P 500. So we tend to maintain a bias for the sideways motion to continue. On the other hand, please note that we have the RSI indicator which remains between the readings of 50 and 70, implying still the presence of some bullish tendencies among market participants for the index, which could practically push the index higher. However, for bullish outlook, I would require the index to breach the 5,720 resistance line. Okay, let's have a look at some forex pairs. I would like to have a look at the Aussie, and I'm highlighting the Aussie practically on two reasons. The first reason is that Australia's CPI rates for July are due out during tomorrow's Asian session. June's headline rate was at 3.9% year on year. Should the rate accelerate, or I would be saying also fail to slow down, that could provide some support for the Aussie as such. And I'm mentioning this because in the release of the August meeting minutes, it was revealed that the bank was considering actually a possible rate hike. At the end of the day, they prefer to keep rates high but steady. I wouldn't be surprised to see the discussions about another possible rate hike being rejuvenated should the CPI rate accelerate tomorrow during the Asian session. So that's an issue which I think is going to be closely watched by Aussie traders. The second issue I would be highlighting about the Aussie would be the US-China relationships. We have a visit of US National Security Advisor Jake Sullivan in China. He will be meeting also with Xi Jinping. Matters to be discussed are expected to include also the Taiwan Straits, and possibly also the selling of weapons to Russia from the Chinese, which they are using in the Ukraine war. So that's an issue which, if it does not play out well, it could actually signal deterioration in the US-China relationships, and thus could weigh on the Aussie, given that Australia has close economic ties with China. So it's not only financial releases, also the fundamentals and the surrounding environment are playing a key role in the Aussie's direction. Let's not forget that the Aussie is considered to be a commodity currency, which is considered of riskier nature in the FX market. And should we see the market's sentiment actually turning a little bit more sour, that could weigh on the Aussie substantially. Nevertheless, for the time being, we note that the upward movement of the pair is being maintained. It's being supported by an upward trend line practically since the 5th of August, if I'm correct. Yeah. One could also start the upward trend line from here. That would be far more tight. Should the upward motion be maintained, I would expect the price action to breach the 0.6795, which has proven itself as a key resistance line. And I'm highlighting this because it was tested once, twice. I wouldn't be surprised to see the level, this resistance level, gaining the day over the upward trend line and forcing the pair's price action to move lower. Should the pair actually drop, breaching the upward trend line, signaling an interruption of the upward movement, but also breach the S1 0.6710, which used to be more of a resistance line, now turn to support, then we may be seeing a bearish outlook emerging for AUD/USD. Let's have a look also at EUR/USD. Once again, we see some hesitation on behalf of USD bears, which caused a correction lower for EUR/USD yesterday. At this point, I would like to actually widen the resistance support line somewhat. Somewhere here. Setting the S2 at 1.40, 1.1040. And the S3 100 pips lower at 1.0940. Now, some are considering this peak here as a natural resistance line. Yes, it did cause some hesitation among EUR/USD bulls, but as long as the upward trend line remains intact, I would expect the price action to gain more ground to the upside, aiming, if not breaching, the R1 1.1250. May I also highlight here that the RSI indicator below our 4-hour chart is at the reading of 70, implying a strong bullish sentiment on behalf of the market for the pair, which could actually push it higher. For a bearish outlook, we would require the pair to drop, breach initially the S1 1.1140, definitely breach the pre-mentioned upward trend line in a signal that the upward motion has been interrupted, with the following test for the bears being set at the 1.1040 level, which used to be a resistance line, but has now turned to support line given that the price action has moved decisively higher. Last but not least, USD/JPY, also in a stabilization mode after hitting the floor at 1.4345 right here. It's going to be interesting whether the price action is going to be breaking the short-lived downward trend line over the past week. If that's the case, then we may be discussing a possible stabilization of the pair. Should the R1 be breached and the R2 starts to be aimed, then we may be talking about a bullish outlook. Should the bears maintain control though, then I would expect the price action to breach the 143.45, most probably form a lower trough than this one. And that would mean that the price action of USD/JPY would have to actively start aiming for the S240.15, a level which provides support back here. That should sum it up for the day from all of us here at IronFX. Best wishes for solid trading.
Okay, shall we start? Again, welcome everyone. So today's topic, I'm going to talk about Gulfi multiple moving average strategies. Okay, just before we start the session, I just want to highlight risk warning over here. Okay, anything in this video is educational in nature. Nothing should be construed as investment or trading advice. If you want to trade, please do your own due diligence with the guide trade. Okay, and maybe disclaimer here. Just mention. Maybe just want to highlight risk warning over here. As we already know, trading, forex, and CFD may carry significant risk to your capital, and it may not suitable for all investors. So please come and join the webinar and learn together. Okay. The speaker today, my name is Peggy. I'm an investment analyst and a prop trader as well. These some of the certificate that have passed all the challenge. If you guys want to know about the prop firm, you may just Google it. All right. So just a quick one. So basically, how you get all certificate, which is you need to pass all the challenge. Phase 1, phase 2, which is phase 1, 8% profit target, and phase 2, they have like 5% profit target, and they have like 5% maximum daily drawdown. All right, just quickly like info for all the prop firm. And as you know, today I'm going to cover which is what is the Gulfi multiple moving average strategy. Okay, how to get the entry and the exit criteria, and how can you improve on it. Okay. So what is a multiple moving average strategy, or maybe short form I just say GMMA, for the short form for Gaffey multiple moving average. Okay, strategy is a trading technique developed by Daly Gaffey. It utilizes the multiple moving average to analyze the market and identify trends. The strategy used two groups of moving averages just to represent short-term and long-term market sentiment. Okay, and this is how it look like. Okay, the GMMA. Okay, I'll bring you guys to the maybe the chart later, and how we going to implement this indicator. Okay, so actually it consists of two of moving averages for the part 3, 5, 8, 10, 12, and 15. This for the short term. Okay, and those moving averages represent the behavior and sentiment of short-term traders. Okay, so the moving average 3, 5, 8, 10, 12, and 15 day, which is the green color, which is over here. Okay. And for the long term, moving average consists with the path 30, 35, 40, 45, 50, and 60 days. Moving averages represent the behavior and sentiment for the long-term investor, which is the red color, which is this one. Okay. And how we're going to use it in the chart. Okay, so you can use GMMA to identify trend. So basically, when the short-term moving average is above the long-term moving averages, which is when, okay, the green one, which is a short moving average, go above the red color. Actually, there's a long that will be color that will go for wait, okay, that will be identified for the uptrend. So when they close, we will gonna buy over here. So basically for the okay, when the short term moving average is above the long term, which is when green above red, okay, and both group are separated with a clear gap. So basically when the green go above the red, and you can see really clear a gap here, is indicated a strong uptrend. You can see that when there's a gap between the green and the red color line, we already know that it's strong uptrend. When the short-term moving averages are below the long-term, which is when green cross below the red color one, and then you can see there is the gap here. Okay, it indicates a strong downtrend basically. Okay, so how are we going to get a entry and exit signals? Okay, for the buy signal is generated by the short-term moving averages close above the long-term moving averages. Okay, for the sell signal is generated when the short-term moving averages close below the long-term moving averages. So basically this is how I just mentioned. You can see that, okay, for the enter, okay, this is a buy signal. You can see that when the short term, which is the green color, cross above the long term, which is a red color, we're going to enter over here. And I circle over here, meaning that this is acting at the support level, meaning that this is our maybe buy entry. When the price pull back here, is acting at a support. Either you want to get another buy entry over here, buy entry over here, buy entry over here, buy entry over here. Okay, and we're going to exit our buy position, for example, for this pictures, when the short term close below the long term, which is green, close below the red color one here. Okay, we will exit the buy position, because in this case we're going acting at the resistance level. Okay, when price go above, pull back, it acting at support level. For in this case, it acting at the resistance level. Okay. The setting to use, which is already just mentioned, for the short term, we use EMA typically set at 3, 5, 8, 10, 12, and 15 period periods, which is like the previous days. Okay, for the short term EMA typically set at 30, 35, 40, 45, 50, and 60. Okay, and you can see that when close above here, we're gonna buy. Okay, and then you hold a position. This is how it look like. Okay. GMA track the two activity of two major group in the market. Okay, for the short term, you should a trader like we are the retail trader. Okay, investors could be like bank or any like swing trader. They like to hold like the position longer. Okay, for the trader, we will track at the like the green color one here. Okay, and okay, for the trader, little trader, we will use the short term, which is 3, 5, 8, 10, 12, and 13 moving averages. Okay, like all we have we trade, for example, we already see that price is go below the GMMA, right? Like go below. It's only acting at the resistance. Either here you short and then you short from this one, either you close as like you at this level, but in this case what you can see here is acting the resistance level. This is go up to until the investor or those like bank or institution for the red color one. Okay, by the way, if you have any question, you can let me know as well. For the investor or those like bank or big institution, you can see that they are used longer term, which is they are using 30, 35, 40, 45, 50, and 60 EMA. Okay. Don't worry, after this, we bring you guys to the trading view and we're going to implement this and practice together. Okay. And finding trend. Okay. What you can see here, the trading plan, like I said, there gonna be two type of trader, short term, either swing, day trade, investor. That could be could be swing trader or position trader, or those like back intuition. They like to use like the longer EMA right here. And then, how are we going to identify trend? Basically, we already know one price, meaning that the green color one, which is the short term moving averages, plus below the red one, which is the long term moving averages, right? You can see the price on downtrend, basically because price falling, pull back to the GMMA, and then revert and then continue to the downtrend. When price go below the GMMA, we know that it's going to from uptrend to downtrend. Okay, when price close above, okay, the GMMA or the long term, which is the green one, short term close above the red one, we know that price changing from downtrend to uptrend. Okay, maybe let me just go one more slide and then we'll show you the opportunity. Okay, well, strong trend trading opportunity. We already said that price direction supported by both short term and long term. Okay, this is just the same one. Let me just show you in the chart over here. Okay, let's just go over to the trading wheel. Okay. Okay, in the trading wheel, you just go to indicator here. Okay, you just go to GMMA, which is short firm. I pick the first one. Okay, you can see that a lot of traders are using this one, like 4,900 like user here. Okay, you can just go and implement. Just click. It will look like this. I use default setting, which is just the same in the slide. I just like over here. These are the short term and the red one for the long term. Okay, and the number of the setting is the same over here, which is 3, 5, 8, 10, 12, 15, 30, 15 for the short term. And for the long term, they're using 30, 35, 40, 45, 50, and 60 period. Okay, and how are you going to use this? Which I just mentioned. Okay, you see really clearly that one. Okay, short term, I will just mention one green, okay, is a short term close above the red one, which is a long term GMMA, which is over here, right? You're gonna buy one price close above here. We buy here, right? And you can see that price go and this one pull back to the short term, which is acting in the support level, and again it pull back to long term here. Okay, and then this is a strong uptrend. Why strong uptrend? Because you can see that one both short term and long term, okay, they like separated and have a gap. This is really strong uptrend. You can see that this is really strong uptrend. Okay, and we enter the buy position here, and we're going to exit when the price, when like the red one, the green one, like close below. Now it's gonna closing. So basically we see like that. Okay, because now we in head 4 time frame, right? Over here we know that there may be a divergence here. Okay, you can see that we're going to exit when price starting like close below here, and of course now price already break below this support level. If you know how to look at the support resistance, it used to be our support, now is become our resistance level. So either you exit when you see the price, it seem like make a price action here or make a divergence here, or seem like the short-term moving average just like like close below here. Either you exit here or you exit at this level, meaning that if you have the entry seen from like this entry, we're gonna buy up, and you exit at this level. We go for the long position here. Okay, and we target and we exit at this like level because price is falling and it's similar close. We put there, and we going to put the Excel here. You can see that the RR, risk and reward, is almost like 4. I mean, let's just say 4, or maybe like more than 3, 1 to 3. Okay, so you can use this for like swing. If you're a swing trader, you can use GMMA for identify trend. And now we are gonna short. Okay, I already short the GBP because price already break below my kind of support level here. Okay, this is very strong, and there is a divergence here versus the I side. It is I side here. You can see that. Okay, price make high indicator is make a lower high, so there's a divergence here. Either you use this one, you hold your buy position until you see kind of like the divergence here, bearish divergence, or you see the price action and then you exit your buy position and then you sell. Okay, and this is an example. In head 4, what's about even we're gonna use GMMA on gold, okay, USD. Okay, you can see that. And another one, when the price is sideways or ranging. Okay, what you can see now, one price is ranging here. You can see that the GMMA is kind of like where is my, okay, it's like they look like narrow here, right? You can see that it's close the candle here, and then you can see that the line is just close to each other here. So in the price ranging, you can see that's right. And we already monitor that. Okay, it seems like here you want to trade, definitely we know that this is our support level. Either you buy here already, and then you can see that you buy here and then see the price kind of like close above, the green one close above the red one, which is a short-term close above the long-term. Okay, we might have another buy order over here, and then you hold. Okay, and you hold, even though let's say you hold here, you buy here, pull back here, now it acting at the support level. In this case, like you can see here, like you can see the rejection here, right? This is acting at the support level. And it go to here, the long-term one, and then after they bounce off and continue to go uptrend until here. If you know how to look at candle, look at the candle, you know that this is like the rejection over here. And then to me, when I want to exit, I don't have to wait until like short-term close below the red one, because you may only form like you earn a lot, become you earn later a little, because over here you can see that at this candle they close with the bearish engulfing candle. In this case, able to hold my buy position, I'm using the trailing stop loss, up to here, and price is for close with bearish engulfing, which a lot of rejection over here. So meaning that to me, I will exit my buy position because price reach changing momentum from uptrend to downtrend. And what you can see here, one price close with bearish engulfing candle, and this one it can about this kind of about up here. Okay, from here they go back to where, and then end up with another price action over here, and then you can sell. Okay, either here pull back here you sell. Why we sell here? Because you can go to the H1. In H1 price is closing with price action. We will just zoom to see this is our price action, and over here is, I don't know whether you guys joined my webinar yesterday. Yesterday I think we shot GBP and we shot GBP, right? Again, you can see that this is our, either you call supply zone or you identify your bearish order block. Same meaning. Bearish order block, you can see price falling and bounce off from the support level here, and then we gonna short at this candle because in H1 price go to like bearish order block, and we have price action here. Okay, from buy position here we close and then we sell. Again, you can see that now the short term is close below the long term moving averages, which is green, close below red color, and they really strong downtrend because what you can see here, there is a gap between short term and a long term, right? And then you hold until where you just hold. Okay, if you don't know where close, like where to close profit, either you close at a support level, or you can close when the green, something like that, the green close above the red one, meaning end of the downtrend. Okay, and then you close. But now you can either you short from here, you can use the trailing stop loss, like maybe you you like your stop loss, and then you use like a move every like 10 pip. Okay, to lock in your profit, for example, move until here. Let's say maybe here price bounce from this level and hit your stop loss here, meaning that we still earn a big money from this area to this stop loss here. There quite a few bit from there. Okay, so this is how we trade with GMMA. So GMMA, if you are a swing trader, I think you can use this indicator. Okay. Okay, let's just go back to our chart here. Our thing. Okay, let's just cover easy identification of overall trend. We know the price go below the GMMA is on downtrend. Price go above is on uptrend. Okay, and identification on the overall trend. They say this is a reversal. So pull back here. Okay, reverse here and then continue, and now ranging or consolidation here, because you can see the price is the GMA is just close or just sideways on the candle here. Okay, price action, how to implement and read it, I already tell you guys. Okay, the degree of separation, strong uptrend, really strong downtrend, because there is a gap or the big gap between short term and the long term moving averages. Okay, narrow separation or crossover trend is weak. You can see that, or wider separation is a really strong uptrend or downtrend. Okay, crossover is a bullish. We're gonna buy here. When close below is a bearish, we're gonna short from the level. We buy here, exit here, and then we short. Okay, which is just now I just show you guys. Okay, heavily intersection, lack of price trend, meaning just a sideways. Even it's sideways like that, either you buy, we buy here. Okay, price go to kind of this level. This is kind of identify resistance level. Okay, and then you can see the price kind of like ranging. From ranging here, either you close your buy position and then we're gonna short from this level because strong uptrend consolidation or sideways and then continue to fall, right? And then you can see that the green cross below and then there's a gap here. Okay, we know that we're going to hold our sell position until here price kind of like, you know, go above here. Either you exit here or you can see that there's a rejection here and then there's a price action. You choose exit your sell position, okay, from here either, or maybe of this kind of boom here, okay, and we put our sell here. If like, you know, if you not close your sell position here, if from this one you might just earn a few dollar or few like dollar here. So just use your trailing stop loss when we use GMMA, or then you can lock in some profit. Okay, this is a long example of buy position. This is the bullish here. We buy here, we hold, and then we exit over here. Okay, you can either exit here as well, but to me, our exit when the price is already has bearish engulfing, and then you can see the consecutive red candle here. So you should already know that we should exit the buy position. For the short example here, bearish. Okay, the green one short term close below the red one with the long term moving averages, and then you can see that there is a big gap here, pretty strong downtrend. Okay, we short and hold. Back here, pull back. Either you have another short position and then you hold, and either here, okay, I will exit my short position because it seems like they're going to like go above the red one, okay, but then after they continue to go downtrend, either we exit here and either here, or you have another sell order here, because it seems like this resistance level and price action here, okay, and then continue to downtrend. All right. Okay, this is a breakout from consolidation. Okay, when the line that the split, that mean here we already know, I just mentioned it, very strong downtrend because there is a gap or subluation here. Okay, boom. Long-term pullback, I just mentioned this how actually, so this how the trader use the this indicator. Okay, you can bookmark, but I think it's a good for the swing trader. Okay, you can see they're really strong downtrend. Definitely you're gonna hold gold, right? Because you have to look at dollar. Let's just look at dollar as well. You can see that it's really strong uptrend as well here now, right? When they close at this one, they are just sideways here. Suddenly they break because of this candle, and then the green one, they close above the long-term moving averages, and then you're gonna buy right from this level, and then you're gonna hold until when? Hold until the green one close below. Okay, this is a head one time frame. What you can see here, look at the candle. This is a sideways or ranging or consolidation somewhere around here. Okay, over here, and the green one, which is the green color here, close below the long term, which is the red one, and then you're gonna hold your short position here and then continue here. We might, some of you guys might want to exit, like you see that, okay, should I, let's say one price go like that, okay, you either, some of you guys don't know to trade just based on GMMA, you might exit the short position, but you might think that, okay, seems like price is going to change from uptrend downtrend to uptrend, but you to trade with other like technique, which is in this case, I identify this my kind of like resistance level, and then I make kind of like pull back. You see, okay, it seems like price already almost like overbought, right? And then you hold, and then you can see that I have a lot of rejection over here, and then either you short here, you short there, and then see the ranging here, you have another short position, another one, and then you can see the price close below, and then you hold until exit here because strong downtrend, and then after that is suddenly sideways. Okay, whenever you see that the candle or the price sideways, should exit either buy or sell position. Okay, no need to hold until like the green one close above or close below the red one, because okay, you might from your, for example, like from you earn $100, it might become like $50. Okay. These are the dollar. What about its work in gold? Gold is very strong. You can see that gold in H1, this how in H4. I think in H1 you will see very clearly that from where starting to sideways at this level, right? Somewhere here, and then you can see that the line they like close to each other, and after that they kind of like go close above, which is somewhere here, right? And then you buy because you know that is our support level. A lot of rejection, price just sideways, continue to break here, like break this level, right? Like break here, okay, and then continue. You buy here, price pull back, you can have another buy. Either here you buy because here we buy because this is our support level. It just pull back to your support level here, right? And then after that you buy, and then you hold, and then after that you can see that the line, the color, the red line, they're starting to kind of go far away from each other. You can see that the degree of the supplation here, and then you can really know that this is very, very strong uptrend, right? You can see the uptrend pull back at, they are acting as support level, support level, support level, and they are really have a big gap here. Okay, now they are pull back once. Okay, you can see that very strong uptrend up to here should exit the buy position here, barely engulfing, closing already. There might be a divergence here. Okay, and then you should sell. Okay, for gold. This is very nice trade setup for gold. Okay, and falling. You to ask me gold. I'm kind of like waiting to. I already shot gold and close already. Okay, like just now price kind of pull back here a little bit as like support level. It's only going to break here. So the target for gold, I'm looking around this level, which is the support level here for gold. I'm gonna, which is 2004, slightly 2004 to 23.95. That's gonna be my first support. Either you're gonna buy from that. There are 50% here. So basically, I'm gonna buy gold around this level. I buy because I buy again the trend. I did not follow the trend because it seemed like now selling gold already. So you're gonna buy here at about 23, 23.95 to 24,000. Okay, I will just buy here, and then my TP take profit is gonna be somewhere for scalping, or this is gonna be like TP1, meaning that if I'm gonna buy at 23.95 or 24,000 here, at least 100 pip or 200 pip, or at least for scalping 50 pip to 100 pip, you should close, or you telling stop loss for gold, right? Because from here, I think there might be a people want to sell from that level. Target 2004. That for gold for the first support. Second support is gonna identify at this level. This is my second support, meaning that falling another almost 200 pip or 300 pip falling from first to second support. That will be 50 to 50 and 61.8% fib level. Okay, you can see that falling very nicely in gold, right? Very strong. This H4, okay, this will have a gap here, really strong downtrend, and then we gonna wait for the price to come to our support, and then we gonna buy from that level, which is the buy zone. Okay, you need to set your stop loss as well, because you probably really have really fall all the way to second support. Just put your stop loss. Okay, you just consider, okay, if you want to buy this level to buy, But if you, oh, where is the, do I delete it? What did I do? Okay. Okay, this is the buy entries you consider okay. But if you don't not confident, just trade, maybe just try the strategy, buy from here, put 0.01 at least, right? And try to trade on the real account, not the demo, because if you trade a demo, there is no emotion. Okay, at least you trade a real money, you can use like the iCent, or you can use like a dollar account, and then just put like 0.01. At least the real money, you will have the emotion involved. Because if you trade demo, you put 100 lot, you put like 1,000 lot, you earn 1 million, 2 million in a demo, you don't feel anything because there is no emotion involved. But if you trade with your own money, real money, and then you will, you know, there will be emotion, you will feel, they will feel like how the trading, um real trading work. So this is a buy entry for gold. Okay, still falling at least here, at least 2004, they're gonna be my first entry, and the next instead we're gonna be 23.95. So between this one, I'm gonna kind of layer, meaning that I will have like small lot size here. Okay, I don't put like 10 lot or like 5 lot at like 24,000 here. I will just have like smaller lot here for gold. Okay, do you have any questions so far? I'll pause here for a while. Let me know if you have any question. Okay, that's all for the GMMA. Let we just package it together. Okay, for this your USD, it is a picture that I took from here. Okay, here. Enter here, so you can enter here, enter here. I think I enter H1, which is here. Okay, you should enter from here or here, and then you can say close, and then you continue to buy, and then we exit when close over, which is the green cross below. So shall we should we buy or sell the EURUSD based on H4 time frame? Okay, the target for EURUSD, which I'm looking at for the first support, are gonna be somewhere around this level. Okay, that will be let me just remove the what I wrote just now. You can use Fibonacci, okay, and then we can use the extension. Today is a Friday already, so you already won some money today. I usually don't trade during the New York section. Okay, because my time zone, I'm based in Singapore. When the New York section is about 8:30 p.m. Okay, so by 8:30 p.m. usually I don't trade if I already hit my target for the day. Okay, so for the first support, I will identify here. So meaning I target at least over 4 to this level. Okay, or this is my like you know my kind of like intermediate resistance, meaning that if price break here, gonna pull back, am I gonna short from that level? And again, you can use correlation to trade as well. So USD is a negative correlation with DXY. This is either I identify my first support, or sorry, let me see. I pick this gonna be my first support. This is my intermediate support. Let me see how many pip from this one to this one. 15 pip for scalping. I'll just put no may I just put at second support here. extension, just remove it. Meaning that if price break here, okay, the target which is at the first support here, and then the second support gonna be there. Let's just reuse the. Okay, we have 38.2% fib level on second support. Now, let's say if you identify your first support here, if we want to buy now, can we buy now based on what we can see? It seems like we can buy. Okay, we can buy EURUSD now. But again, if you buy and then you need to know where you're going to put the stop loss, okay? Because this is really strong. The reason I want to buy here, see, I haven't clicked, I want to see first, okay? Like this one, I might identify my kind of like support. It seems like break below here, and then I identify, okay, this is another kind of like support level, but it seems like there is a wick and the body somewhere around here, meaning that I'm gonna buy now, and the price, my stop loss, I'm gonna put just slightly below this wick, because I'm not gonna put the first support here, because it hit my stop loss, my neck plan. I will see if price come to my first support here, which I identify here, and then I see the confirmation. I'm gonna have another buy entry right there. But if you have really big account, and then you either you buy now, you can put your stop loss below your first support, up to you. Because you know our lot size and account size is different, so you need to manage your lot size. So it seems like this is my buy zone. But let me see, this my M15, the rejection. What about M5? Okay, I'm gonna buy. I'm not gonna ask you to buy. This is your own risk. Okay, if you want to buy, it up to you. I'm gonna buy EU. Okay, I just click buy EU, so you may consider. Just this is my buy zone. So when come to the zone, I just buy. Okay, if you want to follow, you want to try, you just put 0.01. That's all. Okay, because sometimes if you know how to identify the level, key level, and then price come to the zone, and you know sometimes you dare not to like enter or like have the order here. Okay, but I already put one. I will see that better. About for me, I already put my set my stop loss as well, just slightly below this week. Okay, let's just see. Okay. Maybe look at dollar. Dollar still can. Okay, for key level for the dollar. Okay, they are very strong. This one could be the first resistance here. If they can break above this one, the next target that would be its first resistance. I think the second resistance are gonna be somewhere here, which we just use. Now in this case, right, you can see that now this strong downtrend, and they are acting at the resistance level. Let's just say whether price can fall from this level, meaning that if dollar is falling, EU GU gold will be rising. Okay, now it's approaching the resistance level, then EU somehow is at my support level. Okay, I will see whether they can bounce from this level. It's a H4. And GU still follow. For GU, GBUSD, I'm not gonna buy now because that is not the level that I'm looking for. For the GBP, I will wait somewhere. How is this level? If the price come, and then I might consider to buy. Okay, because looking for sell GBUSD. Okay, this is how it look like in M5. I think I should be positive already. Let's just see, okay, whether it go here. For scalping, you just maybe aim for 10, 15 pip, 20 pip for USD, and you may close the entry. And it's very nice. Okay, if you enter together with me, we already positive for the EURUSD. Okay, I'm already positive. So Okay. The first when I enter, I just put my SL stop loss, but I did not put my TP because TP I always put the last one. Always put stop loss first. Okay, just go to another pair. For the utilization, we already buy. Like this is our buy zone, right? Price already rising and already hit the TP, which is the TP or take profit. It's at this level. It already TP and then falling. Meaning you ask me whether we're gonna shop from this level. No, because that is my, even though I identify my TP there, but the level that I'm looking for for sale, okay, that would be around this level. Because there is a very imbalance over here. There is a fair value gap somewhere around here. There will be slightly go below this. Either you sell at the 61.8% fib level, meaning that you're gonna short from this level. We should see the confirmation somewhere around this level. It's gonna be my second resistance here. let's say you're gonna short here. I'm not gonna hold until here, okay? My TP, this is to be my first support for my TP1 or my first support here. And my second support I'll put at the multi-swing low here. Okay, I think price still can pull back more. Pull back more is oversold. It seems like the MACD is already closed and then you can see the green one. So at least target somewhere here. Okay, we will see for the USD shaft. It's not the level for to sell yet. Okay. USD shaft break everything. Okay, what you can see, let's say we short here for the GMMA based on indicator, we short because the green cross below, right? You can see that this very strong downtrend because there's a big gap here, right? And now price come to this one, we should exit the sale position and then we should buy. That should have divergence as well. There's no divergence, but over here, oversold, right? Yeah, oversold, cross above, the green one go above already. The histogram here, that's why we buy. And then the candle also close with the bear bullish engulfing candle as well. Should exit the sale and then you buy for the USD session. Again, USD JPY we buy, but we buy which you should close at the resistance level. Okay, because for all momentum it is still on downtrend for USD JPY. Okay, the level here, this is my resistance level. We short here, I think I get 20 pip. I already closed. Okay, so if you were to ask me, I'm gonna sell again or no, because even though it's still falling all the way there or below, but it's okay because we can earn every day. Okay, you just set your target. You want to earn like how much you want per day, or this pair you set for 15 pip or 20 pip and then it TP and then you just close your computer and we can do other own thing, okay? Because trading is just a part of your life, right? It's not everything. So we also have other things to do. But some people they have a mindset like if they earn 1,000 and then they think that okay, I think we should earn more. Maybe like today I want to 2,000 or you want like 3,000, but actually your target is like 1,000 per day. And then what if like today is not your day? Instead of you already earn 1K and then you giddy, you want another 1K, but you lose. Okay, you lose your profit and then you also lose your capital. So just set the target, or you can have like multiple account, meaning that like at least 2 to 3 account. And maybe I will share with you guys. You should have like 2 to 3 account. One for swing, one for scalping, and one for new trading. Okay, let's say this account already hit the target. Then if you still want to trade, you should trade another account. Okay, this is my first resistance here. And my support right here. Second support. You can see that it's acting at the resistance level. Okay, that would be 61.8%. So this is the level, but I'm not gonna short here because let me just see. Because I already happy with today. These are the key level. Okay, you may consider you want to short. Because I already have, just now I opened the buy position here for the EURUSD with you guys just now. I still hold, and then it's green. Okay. If you're happy with the scalping, you may just close. Okay, but I still hold a little bit more, and then I might close as well because after this I got going home, so already happy with the profit. Or you're gonna buy here, but of course this is gonna be my resistance level, meaning that if you're gonna hold is your TP at your first resistance, meaning that for me I'm gonna short. Okay, if price go there, go all the way here, like go all the way here, I'm gonna short. Okay. All right, guys. Do you have any questions so far? Where is the... Okay, I'm going along the poll. Can you guys help me vote? Okay, to improve our webinars. Okay, and I will see you guys again. Me and my team will see you guys again, I think next week, because we will see you guys every Wednesday and Thursday. Okay, it's in the poll. Okay, guys. So that's all for today, guys. Thank you so much for your time. See you guys again in the next webinars. Just take care and have a good weekend. All right. Bye, guys.